Welcome to Value Vest Daily, where we analyze the best value and hot stocks daily. Today, we're diving into a company right at the heart of the AI revolution, Applied Digital, ticker APLD. So, is it powering the future, or is this just a really high-stakes bet? To get to the bottom of it, you first have to understand the massive challenge facing the entire AI industry. We're going to break down the massive energy problem AI creates, and then we'll dive into Applied Digital's unique strategy to solve it. We'll look at their financials, see what the market's telling us, and finally, weigh the huge billion-dollar gamble they're making on the future.
All right, let's start with the core of the issue. This is really the whole reason this company even exists.
Everyone immediately thinks it's a lack of powerful computer chips. But the real problem, the thing that's actually holding everything back, is something way more fundamental.
Exactly. It's all about power. And this is precisely where Applied Digital slots into the picture. Their entire business is built around solving this massive energy problem for the AI industry, which, let's be honest, gives them a fascinating position in this whole tech gold rush.
So, what really makes Applied Digital special? Well, in the investing world, the best companies have this unique advantage that shields them from competitors, what we call a moat. And Applied Digital's moat is, well, it's pretty compelling.
I love this quote because it just perfectly captures their strategy. As these AI models get more and more powerful, they need an almost unbelievable amount of electricity. Applied Digital doesn't make the AI, nope. They build these super specialized data centers that house the AI. And here's the secret sauce. They build them with direct access to cheap, renewable energy. They are literally controlling the water that this entire AI gold rush depends on.
And believe me, the industry is thirsty. They've already locked in massive long-term contracts with major AI players like CoreWeave. We're talking over $16 billion in future revenue already on the books. That gives them incredible financial predictability. But as you can probably guess, building these gigantic, power-hungry data centers is incredibly expensive, which brings us to their finances.
And yeah, when you look at their books, you see a story of two complete extremes. On one side, you have this absolutely incredible growth potential. Look at that. Analysts are projecting massive revenue growth for next year. But that growth comes at a huge, huge cost. The company is just burning through cash to build out its infrastructure.
Right, so it's that classic Silicon Valley story, isn't it? Spend a ton of money now in the hope of making way more money down the road. Let's take a closer look at the numbers because you can really see that tension in action.
Okay, let's break this down. That high price to sales and that sky-high forward PE, what that tells us is the market is betting heavily on huge future growth. But then you look at that current ratio of 0.65. Anything below 1 can be a bit of a red flag. It suggests they might have some trouble paying their short-term bills with the cash they've got on hand. It just highlights that cash burn we were talking about.
Right, and despite those clear financial risks, the market has been extremely positive about Applied Digital. You can't fight the narrative, and the AI narrative is powerful.
And you can see that excitement reflected right there in the stock price. It's been on a tear. So to get a sense of whether this incredible momentum can keep going, traders often use tools called technical indicators, like the simple moving average.
So, what is the SMA? It's really simple. It just calculates the average closing price of a stock over a set number of days, say 20, 50, or 200. It basically helps smooth out all that day-to-day noise so you can see the underlying trend more clearly.
And for Applied Digital, the signals are pretty hard to ignore. The stock is trading above all of its key moving averages. So when the current price is higher than the average past price, it shows that the recent momentum is really strong. For technical analysts, this is a clear bullish sign that buyers are in control and the price might just keep on climbing. So, with all this positive momentum from the market, what does Wall Street think? Where do the analysts think the stock price is headed?
Well, they are very optimistic. In the near term, they see potential for about 20% growth. But the long-term view is where it gets really exciting. Some are predicting a potential upside of over 160% in the next 3 years. Of course, and this is a big of course, this all hinges on the company successfully building out its massive data centers and, crucially, eventually turning a profit.
And this brings us right to the big question, the real heart of the matter for anyone looking at this company. Is Applied Digital a smart investment, or is it just a massive, risky bet? It's a classic high-risk, high-reward situation.
On the one hand, the bull case is just so powerful. You've got a company perfectly positioned to ride the massive AI wave with a huge backlog of contracts and strong market momentum.
But on the other hand, the bear case is just as serious. They're losing a lot of money, the stock is expensive by any traditional metric, and they face huge risks in both competition and just, actually executing on these enormous construction projects.
And we have to say, as always, this is just an explainer to help you understand the company and the dynamics at play. It is not financial advice.
It really is a fascinating company to watch. Their success or failure is going to have a huge impact on the future of AI infrastructure. So what do you think? Is Applied Digital a visionary company building the very foundation of the AI revolution, or is it a dream that's just too expensive to become a reality?
That's all for today on Value Vest Daily. Please make sure to subscribe for more daily value and hot stock analysis.